What's going on, everybody? Happy New Year's Eve. 2019 is upon us. I'm so excited. It's been a great year, 2018. Lots of ups and downs. I started a business in September doing accounting and up to 4 clients now. Things are going really well. And so now I'm just focused on putting out more content. I've been doing a podcast and just doing all kinds of things. And it's been a great holiday season because I've had time to relax and that kind of thing. So very excited. So stay tuned for all that. And, today I want to talk about tax deductions, man, because I'm an accountant. I love to save people money on taxes. That's what we do, right? That's why you hire us. And so today I want to talk about 6 things that people aren't doing. Six mistakes that I see that people aren't doing. And in no particular order, but some more important than others. But so the first mistake people make is they pick the wrong type of entity. So a business can be a sole proprietorship, it can be a partnership, it can be a corporation, and then there's like an S corporation that like a small business corporation. So even if you're a partnership, you can be treated like a corporation for tax purposes. And generally the S corporation election, that's the best one, like for small businesses, probably 90% of cases. But you have to be making sales of making profit of like $50,000, $100,000 or more for it to make sense, because there's a lot of compliance, like doing the 1120S form and having an accounting system and reasonable compensation, a lot of different things. There's a lot of requirements to be an S corporation, and so it's not something you take lightly. But you save a lot on taxes if you have it, and it makes sense because you don't have to pay as much for the self-employment tax, which is for the Medicare and Social Security. So entity selection is very important, and now with the Tax Cuts and Jobs Act, the entity selection's gotten a little more complicated, and running the numbers is super important. So that's a mistake that some people make. A lot of people are aware of the S corp if they're working with accountants, but if you're not and you're just starting up a business, and I know costs are a concern when you're just starting up, but it's really important. Talk to attorneys, talk to accountants, get them on your side from day one, and make the right choices. Otherwise, it could cost you literally $3,000 or $4,000 a year by doing it wrong. And all you gotta do is file paperwork with the IRS and just meet their requirements. And so that's a big one. That's a big one. And then second one is mileage and the auto use. A lot of times people aren't deducting expenses that they really should be deducting because they don't track their mileage. And if you want to deduct your miles, you have to have proper documentation of that. And fortunately nowadays, if you have a phone, you can just get an app. There's one called Mile IQ, and that'll just track all your trips in your car, and then you can just say personal or business. And so it's really easy to track mileage. And then if you have a car, you can put your car, your corporation could buy a car and use it for business, but you really gotta be careful, the difference between personal and business, and there's a lot of requirements around that as well, but tons of strategies as well you can pursue with autos, especially today is December 31st, so buying a car today could be fully deductible for your taxes, if it makes sense. You don't just buy stuff to get tax deductions if it doesn't make sense. You gotta think about what your business needs are, because otherwise you're just spending $1 to save 33 cents, and that doesn't really make sense. But if you need the car, you need the truck for your business, then you would definitely want to go for it and pursue all the right strategies with that. The next is the home office deduction. A lot of people do take the home office deduction, and they're afraid of they might be afraid of being audited. It's an area that again, there's a lot of requirements. You need to definitely follow the rules. And with the home office, Like nowadays, people are definitely working from home a lot more, so it's probably not going to be as audited as much. But definitely you want to meet all the requirements. But it's a great way, like if you're using a portion of your home like as for business, like 100% business use, then you get a nice little deduction on that. And then like your mileage, going back to mileage, you can deduct trips from your home, like your home office, to another place of business. So you get deductions there, and you can reimburse yourself too. Like there's ways for the S corporation to reimburse you, like what's called an accountable plan, and and then there's like the Augusta loophole, which is really crazy, and you got to be a little more adventurous with this one. It's a loophole, the Augusta loophole, and that's like Augusta in Georgia, they basically they rent out their homes for the Masters golf tournament, and as long as you rent out your home for under 14 days in a year, then that rent is tax free. So that's a nice, and PGA golfers, they're paying like $20,000 to rent a home for 1 week, and that's tax free income. But with the Augusta loophole, if you have a separate entity like an LLC or an S corporation, you can conduct board meetings at your house, and then you could deduct that rent expense for your company and get tax-free income for yourself. But again, you got to document this stuff really well. You got to really get it notarized. The rent should be in line with kind of like what it would cost to rent a similar venue. So get some quotes around. I mean, definitely this is a little more advanced, and you'd want to talk to people, talk to experts on that, how to implement it right. But it's a loophole, quite frankly. The people who live around Augusta got this loophole, and you can use it for your own business. And then another area where people really miss out is like when they're just starting up, like they use like personal credit cards, and this creates a lot of legal issues. And I'm not a lawyer, so I'm not giving like legal advice, but with personal credit cards, like your accounting gets kind of messy. You have like business credit cards and business checking, and then you have personal stuff, and then you're trying to like put it all into QuickBooks and get it all right, and you end up missing out on business expenses that you did on your personal credit card because you forgot about it. It's out there and you're not deducting it. So in this area, it's really important kind of to have, you just use a business credit card, use a business checking account. Like that's great for legal purposes, and it's also great because you get all the full deductions. You get everything that you legitimately purchase for your business. So that's really important, and there's no question there. And another point where people are really missing out is saving for retirement. You can save for retirement. You get all kinds of deductions, and it's like money you're paying your future self. Savings is really it's an expense of tomorrow, and you're paying yourself. You get nice tax deductions, like nice deferrals of taxes, and that's really time value of money. Time value of money means that $1 today is worth more than $1 in the future. So you save for retirement, and you do the right thing, and then you're paying yourself, and you get a nice tax deduction. So you're saving money. Then that savings then can become more savings, and it just snowballs. And a lot of people, like when they start a business, they don't realize like there's a lot of options out there. There's a simple IRA, there's the SEP, 401k, a solo 401k, a lot of options out there for business owners to set up retirement. It's really easy. Just talk to an investment person, financial planner. Just talk to broker dealer. Talk to those people. Get it set up. They can set up for you really easily at very low cost, and you get nice tax benefits. So that's awesome. And really, like, think about it. All these things I told you about before, you're saving money, right? You save money if you do the mileage, you do the the right entity selection. If you do the home office and then you're deducting all your expenses, then you take that savings, put it into retirement, get another tax deduction, and then boom, you're good. And so yeah, you don't have to just be an employee to have a 401k. You can have your own 401k. You can have your own simple IRA. And a lot of people just don't realize that's available to them, and so they invest in other areas. And it's just not as efficient. Having tax-free investments is a great way to invest and grow capital. And finally, number 6, health insurance. There's another. It's similar to the last point. A lot of people don't realize that you can get health insurance through your company. You can get a full deduction for that. A lot of people, you need health insurance, so why not get the tax deduction for it? And there's certain ways to go about doing this to get that deduction. Certain rules you have to follow, but it's a great way. Again, you have health insurance. You can offer health insurance to your employees. Talk to professionals about it, and then, because again, people think they have to have a real job to get health insurance or get retirement. And in fact, nowadays, it's just gotten really easy, and I don't think the administrative cost is that high. Health insurance can be expensive. Yeah, it can be more expensive for someone who's self-employed. That's a big problem. The cost of health insurance in general is a big problem in our society. But at least having the tax benefit is a great way to pay for it. I hope that things will change on that front and it becomes more affordable for people. But I don't want to get into all that. But I see a lot of times people are just paying for it, but they're not doing it right, and they're not getting that deduction, and that's really foolish, because you could be spending $15,000 a year. Well, that's $4,000 or $5,000 you could be saving in taxes by deducting it correctly. These are great things. 6 areas that I think people are missing out on, and I'm going to just talk about them all the time, because it's so important to get it out there, and talk to professionals. This is obviously just educational material. It's not it's not like I'm giving you tax advice specific to your situation, all that disclaimers and all that stuff. But generally, these are great ways to go about doing things, and Google it. Just find out, inform yourself. I know it's not the most exciting topic in the world, but it's really important. So I'm going to sign off today. Peace out.